Hey, what's going on, guys? Wanted to shoot a quick video looking at an ETF that is doing very, very well year to date. Let's go and dive into it here. So this is a ETF brought to you by Simplify. Here you can see their website. It is simplify.us. That's their website. Definitely go check out their page here. But this particular ETF is ticker symbol HIGH. It is their simplified enhanced income ETF, currently trading around $24 a share. And yeah, so let's go and dive into it. So what does it try to do? It seeks to provide monthly income by selling short dated put or call spreads on a variety of equity and fixed income instruments, which may include indices, ETFs, or individual securities. The fund is intended to be an alternative high yield solution as it seeks to provide significant supplement income to T-bills with low correlation to traditional credit and duration exposure. A sophisticated option writing algorithm seeks to sell spreads that generate attractive risk adjusted returns, while an additional layer of risk management helps manage tail risk associated with selling options. Yeah, so if they were just selling put spreads, right, or just selling puts, puts in general, the risk there is like a COVID crash or a market crash. So the difference with this fund versus like a CSHI, it's selling on both sides. So it's selling call spreads, put spreads, and so forth there. So the expense ratio is a little bit higher, but it is coming in at 52 basis points. Currently has 197 million assets under management. So it looks like their yield is targeting currently right around 10%. So that's good to know there. Full duration. Yeah, so these are some other characteristics. Management fee, we talked about 52 basis points. Year to date's been doing very well. So this is just a NAV calculation here. But we'll look on another page. It's actually close to 9% so far year to date, including the dividend. So pretty cool there. I want to see if they're, so this is pretty cool. So it'll show us their holdings. I don't know if we can target it based upon weight. Yeah, so the majority of their holdings are T-bills, right? So various treasury bills. And then I wonder, I imagine they're probably leveraging this position. But then you could see they're then selling SPXW calls along with SPX. Yeah, so multiple sets of calls here. Looks like they have some puts as well. IndX put, GLD, RUT, and so forth there. So they have quite a lot of different options on their holdings. So that is that's pretty interesting. Let's see if I could see how they're mapped together. So it looks like this gold spread. It looks like that's exactly what they're doing. They're selling a gold spread on GLD. Pretty sure that's an ETF, but they are selling 1,992 spreads there. So that's pretty awesome. Not pretty awesome. It's just I don't know if it's awesome or good thing or bad thing, but that's just kind of, it's nice that I was able to identify that they are indeed selling a spread there. So they sold the 297 and then they bought the 287 for insurance to make it a spread. Same thing with this one. They're selling 38 in DXP. I think this is like a futures. Please correct me if I'm wrong on this, but I think that's the NASDAQ. I think this is the Russell, and I think this is the S&P. So 200. Doesn't look like these. So I don't see 1-to-1 pairs on some of these SPX ones, so I'm not really sure how they're managing those. So those look like to be a little bit more complicated. But yeah, I mean, so this is kind of a breakdown of their holdings. I'm not sure how accurate this is or, when this was last updated. So just kind of disclaimer there. Make sure you go out. If you do look at you want to go look at the holdings, make sure you see what specific date this data is being pulled in from, because it could be updated, every day potentially. So they have recent distributions. Their most recent one was back in June. Looks like they pay once a month. Their ex-dividend date was June 25th. They paid on the 30th in the amount of 16 cents. So those are some of the numbers. Looks like 16 cents, 20 cents, 15 cents, and 10 cents there. So yeah, looks like that's the end of this page here. Wanted to also, so this is the total real returns website I wanted to pull up. So here are some of the other comparison. Okay, so this is actually dating back to 2022. Let's see if we can pull in 2025. I think the 2nd was the first day of the year. Let's see. Okay, so that pulls that in. So we can take a look at the data here and just kind of compare some other popular comparisons. Obviously, the S&P 500 is not really comparable to bonds and an income ETF, but it does look like it's beating the S&P so far year to date. Next on the list is Vanguard's total bond market index. That has returned 1.41% year to date. US dollar has lost some money. Surprise, surprise, right? Lost 2% there, 2.06%. And then this particular ETF we're looking at is up 9.65%. So they've had a very good year. We're only sitting here in July 4th as I'm making this video today, but so they still have a lot of time the rest of the year to continue this performance. They're going to continually make those distributions monthly. But yeah, sounds like they've been doing pretty well managing their spreads and whatnot compared to, just buying T-bills, right? So this is a T-bill comparison. It sounds like SGov is only up 0.10 year to date. So that doesn't really doesn't make a whole lot of sense to me, because, SGov is paying right around 4% per year. So I'll have to double check on that. BND 1.5%. And then this is another popular actively managed short bond ETF that I like. But it's not been doing real well so far year to date, only up 0.4% there. So looking at this list, obviously I like, looking at 9.65% compared to, the next closest one is the S&P 500, which comes with, a lot more risk there. So just kind of do with that as you will. But yeah, let's go down here and look at some historical data a little bit. So last year was a little bit rougher for them. It looks like they lost 1.3% compared to, obviously just buying the market last year would have been well at 21.34%. Year after that, they did around 4%. S&P did 22%. But as far as bonds go, I think they definitely beat the market. So it's bonds with put spreads and call spreads. So you have to understand what exactly that is and the risk with that. And then 2022, they did 0.64%, but it looks like that was the first year they were on the market. So who knows if they were only there for part of the year or whatnot. So do with that as you will. Just kind of understand this could be a little bit misleading, right? So, but yeah, so that's a little breakdown of some various funds here. Once again, we just kind of wanted to bring some light to this ETF that I've kind of came across, and just let you guys know if you're looking for an income fund with a little bit of twist on top of T-bills, this could be definitely a fund you could go take a look at. As always though, this is not financial advice. Please understand the risk with this fund. So, the risk is, right, not only are you buying T-bills, but you're adding additional risk with these spreads. So just make sure you understand that and make sure you're comfortable with that type of risk before ever investing into this fund. And if you are, definitely go check it out. It's been doing pretty good so far year to date. We'll see how things kind of shake out the remainder of the year. But yeah, so once again, this is ticker symbol HIGH, managed by Simplify ETFs. Definitely go check out their site. They have many ETFs out here, all kinds of different types of funds and fund objectives. So if you're looking for more ETFs to do some research on, definitely go check them out. You know, SVol is probably one of their biggest actually they have NTBA, CTA, and then SVol. SVol is another very popular ETF on the market that they manage. Looks like they have almost $1 billion of assets under management. But yeah, so some just kind of wanted to bring some light to that. It looks like this is another type of one too, Buck. We'll have to do a video on this one as well, but this is even a little bit different. So seeks to provide monthly income by investing at least 80% of his assets in securities while adding additional value through an options income strategy. Huh, cool. So I'm not going to go through this one today because we just went through high. But yeah, it looks like they have a lot of different types of interesting ways to combine treasury bills and options, which I'm a huge fan of. And yeah, so definitely stay tuned. We'll probably shoot a couple more videos talking about some other ETFs that they offer. But yeah, guys, that's going to be it for today's video. If you got some value from it, please like and subscribe down below and stay tuned for more content coming your way. Thanks, guys.